Up, guys? It's June 27th, 2025. Looks like we had a trading range day today. Pretty interesting context wise because I was talking to someone in the Discord and we were talking about why did the bar 24 short yesterday not work? I thought that was a good question because bulls had three legs up. One, two, three. So that's a wedge top. We had to sell off yesterday. We gapped up above the high. And I took a zoomed out perspective. I was like, why did yesterday not work? But today's shorts worked. There's actually half a bull trend, half a bear trend. So trading range day. And I started thinking, market cycle is fractal. Second legs are the highest probable trade. Well, look. Got this gap up, pull back, leg one. So this is a pullback for Monday specifically, but in the overall scheme of things, higher time frame, aka maybe the daily chart, this is just one bar. And look at this, look at Tuesday's leg. Is this Tuesday? Or excuse me, so this was Monday. Tuesday we had the rally. Look at Wednesday, it was the pullback. And then yesterday was the high probable trade, a leg two. So leg one, pullback, leg two. And then that makes today a leg three. And what do we know about leg threes? Trading range behavior, two-sided trading. We follow the market cycle, and that's your answer. Yesterday's shorts didn't work because it was a leg two, the higher probable trade. Today's shorts worked because it was a trading range day. It was a leg three on the higher time frame. I want to give a quick shout out to the members and subscribers. I really appreciate you guys following the channel and talking to me in the Discord. The questions you guys are asking, the conversation we have in Discord, they're making me a better trader, and I hope they're doing the same for you. So I really appreciate your time and asking these questions. And yeah, let's do the daily breakdown. So again, talked about this is the weekly daily chart. Weekly chart ended with a big bull bar. We are very close to all-time highs. That's great. Wow. 50-ish points away, just a little bit above 50, like 53 maybe. Oh no, 32. Did the math wrong. 35. Okay. We are super close. So I think, oh wait, no, that's wrong. Okay, there we go. About 40, about 50, 40, 49, 50 points away. I think we're so close to this magnet, bulls are going to test that. If we're in a trading range, which I do believe we are in a trading range for several reasons, this is the weekly chart. I think we're in a trading range because leg one, pull back leg two, pull back leg three, sloppy. Leg one, pull back leg two, pull back leg three. So big up, big down, big ups, trader's behavior. I think this week's bar is starting to become a buy vacuum. Excuse me. Leg one, pull back leg two, pull back leg three. Leg one, pull back leg two, pull back leg three. Nonetheless, this week's bar is becoming the nicest looking bar within the rally. So this week, bulls made 278 points. Obviously, that's not 278. This bar, not 278. Man, it's hard to move this thing. All right. That bar, not 278. Okay. So the only other bar that passed 278 points was the breakout bar in the April 21st week. Other than that, this week's bar was the biggest bar. So I think what I'm trying to get at is that this could become climactic. And I do think we're going to vacuum up to test the highs. However, I want to retrace what I just said. That's just my opinion. When I trade what I see, and I wait for 3 bars and pull back, 2 bars and pull back now. So although I'm saying we see the all-time highs, maybe this just becomes a higher low when we get a 2-bar reversal. I don't want to put thoughts into anyone's head. I'm just thinking out loud. We're very close to a major resistance. We're in the third leg. Trading range behavior is vacuums from support and resistance. So if this is support, it could be vacuuming to resistance. Daily chart. Now we have 3 major legs and smaller legs. So I'm going to count the major legs. So this is all bull bars. So we're going to count leg 1, pull back, leg 2, pull back, leg 3. The reason I count like that because I wanted to measure the steepness. Look how steep this leg is. And this leg is a little bit less steeper. And then look at the third leg. It's not very steep at all. It's broad. So third leg behavior, trading range behavior. Bears were making money. Bears made money here. Oh, well, they made money here. They made money here. They made money here. Here, the Bears actually got a few legs lower. Leg 1, pull back leg 2, pull back leg 3. Within the third leg, they also got 3 legs. Leg 1, and there's a tail, so that's a pullback. Leg 1, pull back leg 2, pull back. Excuse me. Leg 1, pull back. Leg 2, pull back leg 3. The rally starts that we just experienced this week. In trading ranges, second leg traps are very common. So if we count leg 1, pull back leg 2, this could become a second leg trap. Or we could even say I see a very small tick on the height of this bar here. So that is a pullback. There's a shallow pullback right here. So leg 1, pullback, leg 2, and then we have counting like that. There's 3 to 4 legs. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4, and the bars are shrinking, getting far away from the EMA. Last time we were extended, sold off. Extended. Well, in the first leg when it was extended, it rallied. Second time, we actually touched the EMA. We're far away this time, so we'll see what happens. Traded NASDAQ. I'll go over my trades. I traded majority of my trades happened yesterday. Yeah, I traded a lot more yesterday. It only took a couple trades today, and I traded more sim. Give me 1 second, guys. Okay, so bar 1, we have a gap up. Bar 1 is follow through. We actually have an opening rally. Bar 1, 2, 3, 4, 5, 6, 7 bars in a row. But this is also broken up into 3 legs. So we have a gap up, pull back. The gap up is leg 1, pull back leg 2, pull back leg 3. There's a tail, pull back leg 4. But if we only want to talk printed bars, like we could say, I want to say this is a pullback because I was watching the overnight session and this whole thing was just a pullback. I was sharing the overnight session. Man, NASDAQ's overnight session was way weaker. So I was talking about a pullback from this leg down. But it was more, but we broke the high, so it became a rally. All right, so gap up with follow through. Leg 1, pull back, leg 2, pull back, leg 3. And with me saying all that, there's not a low taken out, so there's no trend line, so this could be counted as one leg. Multiple bull bars closing on their high, and we have gaps. I'm going through this a little bit faster because I realized I talked a lot in the beginning. So we have a bull leg, showing to get a second leg up, and on NASDAQ, that's where I got filled. Leg 1, bears have multiple legs down. So for the bear legs, counting pullbacks, leg 1, pullback leg 2, pullback leg 3. Bar 13 is that leg 3. Testing the 50% mark of bar 7. And there's that. So as the trade progresses, right? There's your leg 2. We see the tail on 13 goes 1 tick above 9. And then we see more price action and we realize, okay, this was a trading range. And bulls are going to try and get 1-to-1. It breaks out, bulls break out, and they actually fail at 1-to-1. Trading range behavior, trading range behavior, targets come very close. What am I trying to say? In trading ranges, when we approach targets, traders start taking profits. So they're always just missed by a couple points, a couple ticks, and that's what I'm trying to get at. Is we approach a target right here, 1-to-1, and then it was missed, and the sell-off started. Leg 1, pull back. Leg 2, pull back. Leg 3, and then each leg is comprised of its own 3 legs. Leg 1, pull back. Leg 2, pull back. Leg 3, pulls back. Leg 1, pull back. Leg 2, pull back. Leg 3. I'm very big on leg counting in market cycle and gaps. This gap closed, that lets us know we're already in the trading range. This gap stayed open, so trading range with more bullish pressure. Small bull leg here. It's just a pullback for the bears. Leg 1, pullback leg 2, pullback leg 3. Higher low starts to rally, starts an overall bigger second leg. Leg 1, pullback leg 2. There's enough momentum between 23 through 29 to get a second leg up, and it's a small second leg with bars. The spike starts on bar 31, ends on 33's high, pulls back, and there's that third leg. So leg 1, pullback leg 2, pullback leg 3. Now within this leg, there are no lows taken out, but we have tails, so we know there's on a smaller time frame there's pullbacks. Leg 1, small tail. Leg 1, pullback. Leg 2, 27 is a trading range, has more tail than body. Leg 1, pullback. Leg 2, pullback. Leg 3, pulls back. Leg 1, pullback. Leg 2, there's a tail on 32, pullback. Leg 3, pulls back. Bears get a quick pullback. The bears that shorted here can short higher and get out break even. Not a fan of bears doing that because bar 32 goes past the breakout point, so it's 150% pullback. But they get, look where it lined up. 34 does give them that break even exit, and then we get a quick pop because bears are buying back the market at the same time bulls are buying pullback. 35 and 36. Bull bars closing on their high. Third leg and a third leg. So leg 1, pullback, leg 2, pullback, leg 3, leg 1, pullback, leg 2, pullback, leg 3, leg 1, pullback, leg 2, pullback, leg 3. And I'm counting fractal legs here, so that's what I meant when I said third leg and a third leg. From these 3 bars, third leg and a third leg. Then we get a sell-off, 3 bear bars lower, shot to get second leg down, and that second leg is complete with bar 42. I caught that on one of my sim accounts. Leg 1, pullback, leg 2. Then we go sideways, creates a higher low, right? Higher low, sells off 4 bars lower. 49 becomes that first pullback, and then we see 51 rally and sell off. I like the tail on 51 for bears because that lets me know that the bulls that tried to buy the high of 50 are now trapped and underwater. They never really get out a break even, so they're gonna have to hit out or try and scale in. The bulls that scale in, let's put it above 50. So they barely get their break even price. What is the dynamic between second leg traders? It's trap traders, front running traders, and second leg traders. So trap traders bought the high of 50. They buy more at 54's low. They get out at 56 high. Front running traders are shorting all around here, and they want to press their position. So now they see the pullback. They see the pullback, and they short right here because they also know that trap bulls are going to get around the 50% mark to avoid a loss. And then us, the second leg traders, we have our orders set here, or maybe we're market order traders, stop order traders, and we have our sell stops right around here. And we catch that 1-to-1, or you can hold more for a swing. And that's the dynamic of second legs. I'm really focused on that, and I have seen it increase in my trading. So pretty excited to see where that takes me. Just making sure that dynamic is always present. Trap traders is what tips the market in our favor. So again, we repeat the cycle, right? So there you can see your 1-to-1 stops up here, targets here, entries there. Now we know that there are some bulls who thought 54 is going to reverse, but they thought 56 is going to reverse. We put our target here, and then it looks like bar 60 is right around, we put our fibs here. Looks like bar 60 is right around where they want to buy more. They don't get the so look, they buy the low of 60, never comes out to break even, so they're going to have to sell out for a loss, and that creates one more leg down. This is a trade I wouldn't get filled on because my order would be sitting here. Now here's another trade. Look at bar 60. This is skeptical because it's a third leg down, so there could be more buyers, trading range behavior. We're right around the gap up from this morning. But look, I was watching this one. Bulls get trapped around the 61 high. They buy more on 63. They actually make money. Look at 64. It rallies past break even. So bulls are making money. That is a big context clue to trading range behavior coming up soon. So if you think the market cycle is breaking out the higher time frames, if this is a good bear trend, bulls would not have made money on 64. And then we get that 1-to-1 65. And then look, here's that end of the day rally. I was watching this rally, and I was at work, so I was just placing fibs, and I actually would not get filled. So bears too short here, my entry would be here. It doesn't come back, but shot to get a second leg up, 66 through 69 shot to get a second leg up, and it does 71. 71 shot to get its own second leg up, and it does 73. So what I'm counting is leg 1, pull back, leg 2. This thing's not drawing. Leg 1, pull back, leg 2, pull back. Leg 1, pull back, leg 2, pull back. What is going on? Excuse me. Leg 1, pull back, leg 2, pull back, leg 3. There we go. I was shipping out. 3 legs, wedge top, that gets the bullish breakout. I'm not a market order trader, but look, the bulls who bought the high of 73 got 1-to-1 by the end of the day. It's a quick 1-to-1. That's a lot of points. 20 points. Pretty good trade if you caught that. I'm going to go over my trades real quick, and then we'll call it. There's that. That's that one short I caught. On sim, though. I caught that one on sim. So yesterday, I did good on the overnight session. Where is it? Okay. Caught this 1-to-1 rally. Got that. I went for another one of this rally, and I actually avoided a loss by hitting out. Trap bulls sell out, creates a sell off. I caught this 1-to-1 rally right around here. Because why? Well, bulls bought the high of bar 203. They buy more lower. 50% gets tagged. I'm out on 215. And then I took a loss, but I sized down because I was not liking the close of 218. But I went for the 50% pullback of this one for retest, and you can see I got stopped out in one bar. Then I waited because there was no 2-bar setup, and I see 25 through 28. Took that short, filled on 234, out on 235, 1-to-1. And then I missed this long by a tick, which really sucks. At first I had it like this, and then when I saw a 241 print, this tail, I was like, well, this was the last trap bear, 236. So I moved it here, but I never got filled on this one for whatever reason. That worked okay. Missed it though, and then I went for the next leg up here. Bears are trapped on 241. They start to average in, filled on 248, exited on 250, what is that, 254? 253. I took this trade too. I do like to trade, so I took this one as well. Except I just scalped out on the 259 close. So I made 1 point, and then the next 2 bars went to my target. I think it was like 9:30. Oh, it was 8:40. I called it a night there. I took about 5 trades, and I was up a decent amount. And then this morning, I caught 2 trades, made about 500 altogether. And this was the trade I caught. Bulls get trapped on bar 94. They buy more 90 on bar 99. I got filled on 102. I actually didn't exit. Look, by 1 tick, but then on the opening bar today, it filled me and it rallied. I missed the opening rally by a couple of ticks. Look, I had my order set here, didn't fill me, all good. And then I went for the next leg up right here, got filled on 115. I exited on around 117, and that's when I switched to sim because I was pretty up on the day. So the trades I took on sim, I market ordered short on 117 when I exited because I was looking for a second leg down here, trainer behavior. So I got a little bit better price, exited right here. My stop was right above this bar. And then I took a loss here. Again, this was on sim. You can see, oh wait, how did I take a loss? No, that doesn't make sense. Because I exited on this. It might have been like this. I might have been looking at this like, because there's a tail on 126. Rallied, pulled back, and exited on this bar. Okay, it is what it is. And then I went for 1-to-1 here, and then I went to work. I didn't get stopped out because I shouldn't have got stopped out. I have to check my P&L, but I don't think I got stopped out because my thing was right here. And my stop was 1 tick above the exit. And then I was met here, and then I missed the majority of these trades. But I was just like watching them Here's another trade that would have worked in one. So bulls get trapped at 147. They buy more here. They exit at the 50% mark on 153. That sells off. Big sell off. Same pattern. Bulls get trapped buying here. They buy more lower. I'm filled here. Target there. And then there was one trade that I would have missed. Sometimes I don't take trades. I just place my fips to see if I get filled. Yeah, so this one is the one I would have missed. And then I think I would have got this one. No, I would have missed this. Like, oh, no, I wouldn't have. 161, right? Bulls get trapped, buy more lower. Yeah, bulls get trapped. Hold on. Yeah, right there, I would have got. So bulls are trapped, they buy more lower, break even here, exit in the next bar over. And then same situation would have worked. So today could have been really nice, but I wasn't at the computer. Look, bulls get trapped 163, buy more lower, exit here. Bulls make money, and then again, I missed the rally because there's not 50% pullback. So those are the trades I took live and on sim. Hope you guys did good. I had a good conversation with a couple of you guys in the Discord. I always appreciate it. Hope you learned something. If you learned something, share a show. Don't be a hoe, and I'll talk to you guys later. Yeah, talk to you over the weekend. Have a good one. I'm dropping some more members videos this weekend, some more trade breakdowns, so stay tuned for that. Thank you, everyone. Bye.